NBFCs and Focus Financials. Case for a chat here being clearly the kind of trends that one is seeing in the BFSI space. What were the concerns around the NBFC sector? And of course, how bad really is the asset quality? Who better than Tamal Bandyopadhyay, author and senior journalist, joining in. And we also have Mr. VG Kannan from the IBA with us. Gentlemen, morning. Tamal, if I could start off with you, what according to you is really leading to the kind of sell-off and the negative sentiment that one is seeing in BFSI space? Because many believe that, the entire financial sector of the Indian economy is in a very brittle space and it's all going to fall down like nine pins.
Well, let me be very blunt. I think the root of the problem is the real estate sector. So, unless and until the real estate sector looks up, we really don't know what's in the offing for the NBFC sector. Does that mean the entire sector has turned bad and overnight it has become, or rather over a period of 1 year or so since the last August end, the crisis, the so-called crisis started, is the entire sector has become a four-letter word? Certainly not. Those NBFCs which have exposure to the retail segment primarily, I think there is no concern about that. But those which have exposure to the realtors and wholesale and the last mile financing and the LAP, those kind of instrument, I will not call them innovations, but the way they have been done so aggressively and without proper kind of risk management, so on and so forth, they are continue to be in trouble. And just to give you a little lowdown on the entire thing, I think we are in the third phase of this so-called crisis. From August last year when it started, August end, till about January, February this year, 2008 and 2009, I am talking about 2008 August end and 2009 January, February. There was intense speculation and suspicion whether these companies will be able to roll over their CPs, roll over their, the redeem the kind of, will they be able to fulfill their commitment, the short-term borrowings. Every month it was trillions of rupees were coming for rolling over. We have passed that phase, and then came the liquidity problem. There is liquidity in the system, but the banks are not giving them money because of the risk averseness and the lack of trust. And now we are in the third phase, sort of fear of unknown. Particularly, it's not an NBFC, but the current cooperative bank problem. What happened? That has again reignited the fear of unknown. How much is there? How much is there hiding? That's the kind of thing. So it's on the one hand banks, and the other end NBFCs, and in the triangle is completed with the real estate sector. You can call it nexus, you can call it relationships, you can call whatever you may call, but I think this is the triangle, and we need to, this will not be solved overnight unless India's real estate sector looks up.
I don't think real estate sector will come back in a hurry. If at all, we may see some uptick in low-cost housing, that's about it. So if we are not staring at the real recovery in the real estate sector, can I safely assume that what we've seen with the PMCA bank and let's say a Yes Bank and any other private, PSU bank, this is just the tip of the iceberg and we are in a serious down cycle for next couple of quarters?
You asking me?
That's right, Tamal. The other question is for you. Good morning, Nikunj this side.
No, Nikunj, I am not saying that there is a huge problem staring at us. I am just making a limited point that we don't know. We are in a phase where fear of the unknown. For instance, the PMC bank was the HDIL bank. It was acting as depositors' money, 11 million depositors' money, and they are putting all the money at the backyard of HDIL, and this money was laundered, so on and so forth. And instead of 15% exposure, it took 75% exposure. So relatively small, relatively large, but not in the system perspective very small cooperative bank became the bank, house bank of a piggy bank of a realtor. So that has come in the open. So I am making a limited point. I am not saying that there is deep-rooted problem. I am just saying we do not know. It's the fear of unknown that has gripped the system, and the only way, or the revival, I think the key to the revival of the NBFC sector is the revival in the real estate sector, and key to the revival to some extent, or rather the managing the bank's portfolio better and getting lower, coming back to the standard assets. And for the banks, all of us say that recognition phase is over, now it's a kind of recovery phase. But now the fresh questions are asked, is the recognition phase is over? Probably not. If you see the Reserve Bank of India's biannual report, and the last two reports talking about NPA trajectory going downward, but I have a feeling now we will see a reverse. So the 2019 end kind of NPA what we will see probably will be more than what we had seen in 2018. 2020 NPA figure will be probably more than 2019 NPA figure I'm talking about. So it's not only the NBFCs, the spillover effect is coming also on the banking sector. So again, limited point, it's the fear of the unknown. We don't know. I don't want to play a Cassandra, role of a Cassandra, that everything is bad, every realtor is bad, and every bank and every NBFC will burn their fingers. But the point I am making is we do not know. It's the fear of unknown that has gripped the market, that has gripped the investors. Nobody knows what's going to happen. We are in that phase. So that's the key, and I think we need to address the real estate sector, the real estate sector, if you want faster recovery of the NBFC sector.
Yeah, well articulated. We also have Mr. VG Kannan, CEO of the Indian Banks Association. Mr. Kannan, let's rewind it back, understand how you're assessing the overall situation as well within the entire BFSI space. Do you think that the concerns, the renewed fears are now back within the sector, or they never really went?
I think the BFSI space especially started with the problems associated with ILFS almost a year ago, and thereafter it has been further other companies like DHFL and HDL etc. have also come into focus. In most of these cases of the NBFCs, the issues have always been on the exposure they had in turn on real estate or on construction areas where the payments have been delayed or the projects were for longer periods. So these are all issues which are more of a structural issues, but I don't think so there's a case for the of any liquidity, but more of a case of the payment not coming in time. Solvency may not be much of an issue, but issue of the current liquidity, whether they will be in a position to pay the debts. Many of these companies have actually taken short-term loans or short-term funds of 6 months, 1 year, 2 years or 3 years, and invested in projects which are there for a longer duration. So there is a asset liability mismatch, and this is something which is suddenly played out immediately after the ILFS, where more and more lenders have started focusing on this. I think resolutions on all these things, which have unfortunately has been delayed, could actually pave the way for the entire sector coming out quickly and into a positive territory.
You know, we've got Yes Bank, we've got Indiabulls Housing, we've got cooperative banks, DHFL. There's problem just about everywhere. What do you think has been the key reason for the negative sentiment, and how critical is the current situation? What are the repercussions involved? Would you agree with Tamal when he said that the root of the problem was the real estate sector?
There is nothing which is not critical, and almost anything which affects the banking industry is important. As I rightly mentioned earlier also, all the exposures have been only towards the large real estate companies who have, or financing towards companies which are financing the real estate companies, and therefore the delays on the part because of overall slowdown in the real estate sector has impacted the completion of the projects. So ultimately the best solution is that the projects are completed on time, the houses or the buildings are handed over to the ultimate owners, and therefore the money realized. I think that's the best solution. Of course, that may not be so easy to achieve, and therefore there is going to be a pain in the short run, maybe 3 to 6 months. And thereafter, once the project gets completed, I think the solution will come. But how much of the projects can actually get completed, it has to be seen individually on a case-to-case basis.
Tamalda, apart from real estate, are there any other things or challenges which the banking system somehow has managed to conceal, or they've not been very forefront in admitting? At the beginning of the year, I never thought that there would be such a large drop in credit. I never thought that the retail sales would slow down so much that it will have an impact on the fee-based income and fund-based income. Do you think we are in for a very pronounced kind of a contraction even for good banks? Because if credit and demand is not there, it's going to be a double whammy, because bad loans and slowdown, when they both come together, it will squeeze the system.
No, Nikunj, I think very relevant question, but as you just quick recap, between 2015 September and 2017 March, this AQR asset quality review Reserve Bank of India did, and if you see the graph, all these problems started exposing. Banks started being exposed, only being forced by the regulator. They were sort of in a denial mode, and it started coming in the open, and it got spilled over even beyond 2000. Even now we are seeing more skeletons coming out the cupboard with the more and more discovery with the so-called nexus with NBFC segment and so on and so forth. And then at the same time, following this, we have 21 public sector banks and one private. Out of 21 public sector banks, 11 banks coming under PCA, which means they were not allowed to lend, and I think one private bank, and now it has come 2 private banks. And so it was not half of the number wise, it's half of the banking system, but actually asset wise about 1/3 of the banking system. But even those banks who were not under PCA, they are also curbing their credit because of multiple reasons. For fear of getting more bad assets, and B, the fear of the investigative agencies. Like, even if what do I do tomorrow, will be hauled up. So there was pretty aggressive India's investigative agencies actions those days. You can remember how many bankers were hauled up, and I wonder whether any of the misdeeds would been proved. So I think it's a combination of factors. Now the PCAs have been waived. You have seen the outreach program which started on 2nd October. Thankfully they are not calling it loan mela, and I am told that those who have gone to the field, in the truest sense of the term, it's an outreach, not loan mela. Banks are not doling out loans. That's a good story. But if you ask on the banks, they are not seeing too many, barring a few sectors like I think solar energy and then roads. Those are the kind of sectors where the credit of tech, there is demand. Retail, again, there's a tapering off. So overall, yes, there is a sort of negative sentiment is carrying on, playing out. Even though if you look at all the macro numbers, we have a fantastic monsoon, we had a pretty low interest rate, very low within the RBI target, lower than that inflation. Rupee is not overly, rupee is doing fine, current account deficit is pretty well, but still there is one point is not demand. There is not much of demand as yet, even though the bankers officially saying they are saying too much, but if you see the numbers don't say that. Other part is the fear psychosis being haunted. Still the bankers are being haunted. I am told that recently there was a meeting at the finance ministry level, and they have created a new board where I think beyond certain level the bankers do not need to worry. This particular board will see whether a particular case needs to be referred to CBI. It will be on the board. I think Mr. Vasin, the former Indian Bank chairman, and CVC is the chairman of the board. I think that to some extent probably will allay the fear. So apart from the demand tapering off or not too much of demand, I think the fear psychosis also has been playing around till now. Now the constitution of the board probably will give a boost to the morale of the banks. But I completely agree with you. Things are not pretty rosy at this point of time.
All right. Thank you so much, Mr. Bandyopadhyay, as well as Mr. Kannan, for joining in and giving us a detailed insight as to what the state within the issues plaguing the BFSI and the NBFC space and the outlook going forward. Tell you what, we slip into a very quick break. Stay with us for more on the other side.